Ladies and gentlemen, welcome back to the channel. Here in this video, we will talk Tesla stock, what happened today, what we need to be watching out for coming tomorrow morning. We get the biggest set of data for really the last couple of weeks coming tomorrow morning, and this will have a dramatic impact on our markets. I will share that with you here in this video. As well as that, there is some surprising things that are happening in markets that you may not understand or be aware of. Okay, maybe that's a better way of putting it, but investors right now feel exceptionally bearish. This is the AI Investor Sentiment Survey. It asks respondents one question. It's the most easy survey in the world to comprehend. The question is, quote, what direction do AAII members feel the stock market will be in the next 6 months? Do you think stocks are going to be higher? If you do, you're bullish. If you don't know or you think sideways, you're neutral. If you're bearish, then you think stocks are going to fall. In fact, last week, well, this week, really from Thursday of last week to Thursday to today, you are now at a 1-year bearish high. So right now, you have more bears in markets than you have had in the entirety of the past year. In the last year, we had a 7% drawdown in April of 2024. We had a yen flash crash, carry trade explosion on August 5th. By the way, the NASDAQ was down about 6% that day. It was the closest we have gotten to a market-wide circuit breaker since COVID, okay? And we're more bearish now than then. NVIDIA fell 17% a couple of days ago, essentially, like a week or so ago. 2 weeks maybe now. You're more bearish now than you were after we thought the entire AI trade was just going to blow up. Okay. Now, that week, which was the week of January 15th, only 40.6% of investors were bearish. Today, it's 42.9%. That to me is actually insane. Now, back on January 15th, you were sitting at 34% of investors that are neutral. That's a lot higher than where we are today. Only 23.8% of investors are neutral. Bullish investors were lower then at 25.4%. Today, they're at 33.3%. So as far as a historical average, the historical average is 37.5% bull. So you're below that by about 4%. Neutral's 31.5%. You're well below that, again at 23.8%. And bearish at 31%. You're way higher than that as far as current market bulls today. This to me is actually crazy. And normally when people feel very bearish and there's not a lot of bulls out there, it's usually a good time to be buying in markets. Now, I will also give you a little bit more because the percent of stocks trading above their 50-day moving average is at 51%. Like, this is kind of historically like a median level, okay? During crashes, you get down to 20, 30%. And recently, January 13th through the 15th, the last time investors were this bearish, of 2025, so just like a month ago, you were at like 25%. Okay, so you have recovered a little bit from that point, but you still have almost 50% of stocks trading below their 50-day moving average. Like, this market has not been what you would categorize as like a healthy bull market in recent times. You can also see the CNN Fear and Greed Index today is at 40. Yesterday was at 39, so basically unchanged from yesterday, and you're still pretty solidly in fear. Market momentum is fear, stock price strength, extreme fear, stock price breadth is fear, put and call options fear, market volatility is neutral, safe haven demand is fear, and junk bond demand in neutral. So like anyone trying to tell you that this market is, overly optimistic or we're doomed for a larger correction, I don't think they're really paying attention to the signs and what they mean, because normally when investors are this bearish, it's not the start of a correction. It's normally like the end of a correction, in which this at this point, I mean, you're pretty close to all-time highs, which is kind of an anomaly to say the least, but some stocks like, again, Tesla and other stocks in our markets have fallen a lot from all-time highs. And that's kind of where the disparity comes in here in markets. Now, we actually did get some pretty wild news today. I think this is huge news, breaking news that is going to be very positive for our markets and for Tesla stock. First and foremost, Scott Bessent says a strong dollar policy is completely intact under Trump. Not exactly the greatest headline, okay? Because essentially, if you're Tesla and you're selling Teslas in, Chinese yuan or Japanese yen or euros or pesos, and you're converting that weaker currency to a strong US dollar, you're going to get less dollars, right, on that conversion. Okay, if the dollar falls, that's actually good for stocks and good for multinationals, like a Tesla, for an example. But that's not the big headline. Bessent says, with Trump's policies, 10-year yield to naturally come down. Wow. What timing is that? In the video yesterday, last night, some of you guys just did not like that video. I don't think a lot of you, some of you guys that didn't like that video understood what I was saying. But Bessent confirms it. Okay? Confirms that I'm right in that video. Because, again, the Fed has cut rates 1%. 4 rate cuts, essentially. From the high of interest rates. And 10-year treasury yields have risen since then, okay? Almost on a 1-to-1 basis. The reason for that is not because the Fed needs to cut rates more or anything like that. The Fed controls the short end of the curve. 1-2-year treasuries, up to like 5-year treasuries, the Fed has like an outsized influence on. But when you're talking about 10, 20, 30-year treasuries, it's really the markets that discount government risk, okay? More risk, higher yield. Well, when the government has been spending like they are drunk, okay, and when Wall Street expects that deficits are going to grow, that tax cuts are going to be either inflationary or just simply cause the deficit to grow, 10-year treasury yield actually rallied after the election, okay, from that September low. Well, what Bessent is saying here is Trump and Elon and Doge cutting back on government spending is actually going to cause 10-year treasury yields to come down because we're going to have a more fiscally responsible federal government. We're going to have less excess waste and likely less inflation with it. So Bessent essentially is confirming the video that I put out yesterday. If you guys have not seen that, go search on the channel. I think it is a very important video to watch. Really, for the next couple of months, you could say the next year or two, that video is probably going to be applicable because I do think it's correct. And Bessent is literally confirming it with this statement. And a lot of it has to do with Doge. And I believe that video is headline Elon Musk's secret plan for Tesla stock. And it has Doge in parentheses. That's going to be exceptionally positive news for Tesla as 10-year treasury yields continue to come down. Okay. As you, continue to see, borrowing costs ease up. That's going to be great for Tesla. Now, Bessent says he is happy to forecast trajectory of borrowing that is dropping. Okay, so he's saying that even just in the last couple of weeks, 10-year treasury yields have started to fall, and they will probably continue to fall. He also says that he is sure Powell will, quote, do the right thing. I don't know if that is kind of blackmail or like, I don't know what to take from that. Who knows what do the right thing means? If that means Powell's going to be cutting rates soon, or it's vague. Like Lucas says here underneath in the comment section, it's just vague. I'm optimistic that's a good thing, but we'll have to wait and see. Now, last but not least, another big headline here. You also have a headline that the White House is preparing an executive order to cut thousands of U.S. health agency jobs. Sources apparently is saying executive order reducing U.S. health jobs could come as soon as next week. And this executive order in the works on U.S. health jobs has not been finalized. Now, today in after hours, we had earnings from Amazon, Elf, Cloudflare, Affirm, Fortinet, Microchip, Pinterest, Victory Capital, MPS, and Powell. Largely, they just moved in line with expectations for the most part, and we'll see how things shake out on once conference calls are over with and as we get into the trading day tomorrow. Unfortunately, I think the biggest driving factor of our markets is going to be the economic data for tomorrow morning. So tomorrow morning, you're going to have non-farm payrolls. You're expecting 170,000 job ads. Last month was 256,000. So this is the payroll report for January. A number that's really low could spark concerns about a recession. It would prompt the Fed to start being more dovish, to talk about cutting rates a lot faster. So that would be the positive. Although, again, if it's too bad, then it would bring up some recession concerns. The unemployment rate is expected to stay steady at 4.1%. Pretty much same thing there. If the unemployment rate comes down, that potentially that's not great because it means the Fed doesn't need to cut. If the unemployment rate goes up, then maybe that prompts the Fed to think about cutting rates a little faster. If it goes up too much, then you create some recession concerns. So kind of a slippery slope here with the data with the labor market. So all eyes are going to be on that, as well as average hourly earnings month over month and year over year. You want to see those numbers come in line with estimates. You don't want to see super high numbers because that could mean that wages are not going to be at a place that allows 2% inflation. Okay, so I think that'll be important for investors as well. Participation rate, average weekly hours, government payrolls, manufacturing payrolls, non-farm payrolls, private, and the U6 unemployment rate will also be coming out, as well as a speech from Fed Bowman at 9:25 in the morning. Now, Michigan consumer sentiment will be coming out, expecting largely unchanged numbers from last month. Last month was 71.1. You're expecting a number of around 71.1. So not much of a change expected there. It's 5-year inflation expectations and 1-year inflation expectations that we really want to be watching. 5-year inflation expectations are expected to move higher from 3.2% to 3.3%, which, higher is not good, lower is good, right? So we want to see them come in on the low side. Consumer expectations is expected at 70, up a little bit from last month's 69.3. Current conditions expected to fall from 74 to 73. And let's see, 1-year inflation expectations are expected to rise from 3.3% to 3.4%. So 1-year and 5-year inflation expectations are expected to rise. You will also get wholesale inventories month over month, expecting negative 0.5%. That will feed into a new GDP update for Q1 or estimate from the Atlanta Fed GDP Now tracker that we will definitely want to pay attention to. Currently, it's sitting at about 2.9%. Now, currently, the markets are not expecting the first Fed rate cut from this point until June 18th, 2025. Now, there is a 16.6% chance of 2 rate cuts by June 18th, and there's only a 16% chance of a rate cut coming March 19th. Tomorrow's jobs numbers, if they are higher or they are lower, are really going to move the odds of the Fed acting before June, okay? With a number that is too low, you're going to see the odds of a rate cut jump. And you're likely going to see, Treasury yields move lower, which could be a positive for markets, at least in the short term, as long as the data is not recessionary. For Tesla stock, we have not had a good time here in the last couple of weeks. Really, ever since about mid-December, Tesla stock has started to fall, and we've entered into a danger zone, as I've called it, below 374 or so, below this line here. You don't have a lot of support levels, okay? The next support level that, we could have is this 100-day moving average down to $331 per share. So for anyone that's concerned, Tesla's going back into into like the 200s, I think we would find a lot of support at the 330s. Now, if the data is bad tomorrow, if it shows the labor market is strong and bond yields skyrocket or something along those lines, then that could definitely put some pressure on Tesla, as Tesla is one of the most interest rate sensitive companies in our markets. But in the grand scheme of things, today we got really good news. Well, technically last night there was news that Ford is seriously considering an FSD partnership with Tesla. Okay, they also mentioned Waymo, but there's no chance of that in my personal opinion. The only logical partnership would be with Tesla. So that is some pretty big news that could be coming. As well as that, Tesla looks like they're going to start mass production of Optimus soon. They're now looking to hire 12 new employees. These are more like senior management employees to oversee the mass production of Optimus. And Wall Street just kind of ignored it. So we'll see. If the jobs report is good tomorrow, then perhaps we have a lot of good news recently that could help propel the stock higher. I do think overall the jobs report is one of those big risk catalysts that makes Wall Street kind of stop, slow down, reevaluate things, and just be patient, right? Until the data comes out. I think that's kind of why markets did not do as well today in a lot of specific areas, like software and AI just did not do well today. And I think it who wants to go out on a limb and go all in on a certain stock or area of our markets when tomorrow we could get data that just, wrecks that, right? There's a lot of event risk coming into tomorrow. That's the technical terminology. So afterwards, I do expect a big move. And as long as things do go well tomorrow morning with the economic data, I would expect the Tesla stock could revisit the 390s. Potentially even, tomorrow, you could see a 5+% move, considering some of the weakness that we have seen in recent weeks. So let me know what you think about that down below in the comment section. Last but not least, option activity for the day today in Tesla was was actually pretty positive, coming in with a positive order value of 68%. You had what looks like 311 different trades, totaling $229 million. So actually some pretty decent numbers there, considering tomorrow is a jobs report. And I think Tesla, is one of those good areas where it's priced in a lot of risk already. It's fallen a lot recently heading into the report. So maybe you're better discounted for a bad number if that's what we get. And maybe there's more upside for a good number if that's what we get as well. So let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.